Good morning, guys. We will now start a new chapter about divisional transfer pricing. We are done with performance measurement and evaluation. This divisional transfer pricing beta is pretty simple and very important, guys, from the viewpoint of the examination beta. The weightage of divisional transfer pricing, guys, standard costing and divisional transfer pricing, both of them, guys, are practical concepts. Of course, they can ask us, guys, to infer something out of the question. There can always be requirements of commenting on it, writing about behavioral consequences and all of that, guys. But still better, if you look at the weightage as such, guys, ignore May 2019 as such better. But I can very well assume better consistently that there will be a minimum of 10 marks in the examination, guys. And when you know better for sure that there are only few basic concepts as such, guys, in this chapter, and it will fetch 10 marks in the examination, this should be category A as such. But you will have to do this thoroughly before the examination. Divisional transfer pricing, standard costing, both of them, guys, together might fetch around 20 to 30 marks, guys. I would say, guys, 30 marks easily as such, guys. Normally better 20 marks, bare minimum 20 marks, but normally better it is 30 marks. Okay, sir. So what is divisional transfer pricing, guys? What exactly is divisional transfer pricing? You can all turn to page 9.1 better. To understand what is divisional transfer pricing, guys, you will first understand a few things of the previous chapter. The very first thing beta in the previous chapter, the very first thing that we discussed in the previous chapter beta was about responsibility accounting. I hope you remember that, but I've revised everything, guys, in the previous class as well. Responsibility accounting, guys, is you collecting, summarizing and presenting financial information as such, guys, related to assets, related to revenues, related to cost, that is used better for performance of a particular division, that is used to evaluate the performance of a particular division. We all know, guys, that there is a great extent of decentralization better that happens in large organizations. All the decisions are not taken by the top management. All day-to-day operations are not handled by the top management, guys. Day-to-day operations, decision making, all of them are delegated, guys, to different levels. There will be, guys, top level, there will be a middle level, there will be again better senior level, middle level, lower level of managers as such, guys. Decisions would be, the decision making power better would be delegated. The decision making power better would be delegated. Yes or no? Yes. To what extent better are they delegating would again depend upon the type of organizational structure. Correct, sir. You have explained us all of this in the previous class. Perfect, better. We have spoken about four types of organizational structures, guys. I've spoken about a functional form of organizational structure. I've spoken about a divisional form of organization structure. I have spoken about entrepreneur form of organizational structure, and finally beta matrix form of organizational structure. We already know better that the maximum amount of decentralization, the maximum amount of delegation of authority as such better happens better under a divisional form of organization. Under a divisional form of organization, a divisional form of organization better can be different departments within your company, or it can be, guys, for the purpose of this chapter, it can be different group companies as well. It can be different group companies as well better. Say, consider an example of you having Deloitte USI in Hyderabad. Deloitte USI is the one better that does the back end work better for Deloitte US. For Deloitte US better. So hai to beta both of them are a part of your Deloitte group only as such, guys. Both of them are a part of Deloitte group only. So whatever transactions that occur between them as such, guys, that would be covered by this chapter. That would be covered by this chapter. Understood, sir? We're trying to make sense out of it now. So first thing I'm telling you better is that, boss, every organization will not have every decision better being taken at the top management level. There are decisions, there are operations better that are being delegated. If you delegate operations as such, guys, if you delegate the decision making power as such better, depending on the type of organizational structure, you in the process better are creating responsibility centers. You are creating better responsibility centers. Yes, sir, we know what are responsibility centers. Yes, better responsibility centers, four types as such, guys. There are cost centers, there are profit centers, there are investment centers, and then there are revenue centers. Cost center, profit center, revenue center, and investment center. Four types of responsibility centers. An investment center is responsible, guys, for proper utilization of the investments, so the amount of investments made, return that are generated on investments. Profit center is responsible for both revenues as well as cost. A revenue center is responsible for only revenues. Cost center is responsible only for cost. Yes, sir. Okay. When you know better that there is a responsibility center, obviously there is performance evaluation, guys, of that responsibility center as well. Whoever is a divisional manager, whoever is a divisional head as such, but his performance would be evaluated based on certain metrics. His performance would be evaluated based on certain metrics, guys. In the entire previous chapter, we have learned that we should not be concentrating only on financial measures. There should also be non-financial measures that should be taken into consideration. Previous entire chapter was that only better, that we should not take only financial measures for the purpose of performance evaluation. You should also take non-performance measures. Coming to this topic, guys, remember, guys, this different divisions of an organization. So I spoke about, boss, there is something called as decentralization. That decentralization is leading to responsibility centers. When something leads to responsibility centers, there have to be performance measurement and evaluation of these responsibility centers. How are the performance evaluated? Based on what type of responsibility has been given to these centers. Okay, these centers can be our own divisions of the organization or can be group companies. Perfect, sir, understood. So guys, why do we have this chapter now? These organizations as such, these organizations need not be independent of each other. These divisions as such, guys, need not work independent of each other. There can be certain amount of transactions that occur between these divisions. There can be certain amount of transactions that occur between these divisions. When there are transactions occurring between these divisions as such, guys, when there are transactions occurring between these divisions, a very important concept arises. What is the pricing of the transactions that occurs between these divisions? What is the pricing of the transaction that occurs between these divisions? How are these internal transfers priced? This is where divisional transfer pricing comes into picture. Remember, guys, under performance measurement and evaluation, I told you that there are multiple issues when it comes to performance measurement. One of the issues was internal transfer pricing. This is the entire chapter that talks about the issue of performance measurement and evaluation. So, sir, there is divisional transfer price. You are telling us that there can be transactions between different divisions as such, guys. So the issue arises as to what should be a fair, what should be, guys, a fair value that should be placed, or how should these transfers be priced? How should these transfers be priced as such, guys? Perfect, better. For the purpose of appropriate performance evaluation. Will the transfer pricing have an impact on performance evaluation of these divisions? Yes, sir, undoubtedly. Imagine, guys, that a tax department of a particular firm needs services of audit department. Okay, a tax department needs services of audit department for a certain thing as such, guys. So when they need services of an audit department as such, guys, what if audit department is not billing them anything? What if audit department is not billing the tax department anything at all as such, guys? If that happens as such, guys, remember, audit department is at a loss. Their performance evaluation will go for a toss, while tax department is at an advantage. I'm just trying to give you an example as to why transfer pricing is important. Why is that, we will be concentrating on this so much in this chapter. So if audit department is not charging anything as such, guys, to the tax department as such, then obviously audit department is at a loss, while tax department is at an advantage. On the other hand as such, imagine, guys, that audit department says that I will charge the prevailing market prices, whatever is the prevailing market price. Tax department might object to it, because whenever there is a transaction as such, between two divisions which arises, it's a revenue for one department and it's an expenditure for the other department. Higher the revenue for one department, higher is the expenditure for the other department. Higher the revenue for one department, higher is the expenditure for the other department. The department for which the revenue is higher will undoubtedly be in a favorable position. The department for which the expenditure is higher is undoubtedly in a disadvantageous position. So this is where everyone would want. Everyone is worried about their own performance measurement as such, guys. Everyone knows that their incentives would depend upon financial measures as well. I'm not telling you that you should take only financial measures into consideration as such, guys, but everyone knows that their profits would depend on financial measures as well. Financial measures as well, guys. So यहाँ पे there will be a lot of concepts that we will be learning, guys. A lot of concepts that we will be learning. Concepts like what should be a transfer price from the viewpoint of the entire organization? Is the entire organization at a loss? Is the entire organization at a gain? मतलब क्या हो रहा है? We will be talking about relevant cost also, guys, throughout this chapter. Guys, this is not the first time that we're talking about inter-divisional transfers, guys. You had a topic in CA Inter called as departmental accounts. If you recollect better, there were transfers made from one department to the other department. Either the departmental transfers better were made at cost. Now transfers would be made at cost better if the departments work as cost centers, or better the transfers better were made at cost plus markup. If the transfers were made at cost plus markup as such, guys, obviously better, then they're working as profit centers. Every department is worried about their own profitability. Understood, sir? Crystal clear that what you're trying to convey here is that, boss, there's an important aspect that comes into picture whenever there are transfers between two divisions, and that transfers as such better will affect. See, guys, you have learned transfer pricing, guys. What you learn under taxes, what you learn here better, slightly different. Under taxes better, we are talking about, from the viewpoint of loss of revenue, guys. That is why better under taxes, guys, when they refer to transfer price, they refer to it as fair value, arm's length price. Matlab normally in a market, what would have been the transaction? So guys, you must have learned about section 40 capital A2 beta, 40A2, wherein say you are paying salary as such beta to your own relatives. So it should be justifiable as such, but it should not be merely for the purpose of reducing tax payments. It should not be merely for the purpose of reducing tax payments. We all know, guys, how it functions in business families. The minute someone attains the age of 18 as such, guys, they become an employee of the organization, and every month salary is paid to them. Every month salary is paid. Why beta? Because these people as such beta are in the lower tax slabs. Say if your total income beta is only up to 3 lakhs or up to 5 lakhs or up to 10 lakhs as such beta, you will still pay taxes only 0% or 10% or 15-20% slabs as such, 20% slab. But the family head as such beta might already be in the 30% slab as such, guys. So here beta, this is your tax planning. Government does not want this beta. Government says if this is happening, it should be justifiable. The salary that you're paying as such beta should be justifiable. Otherwise, it is very clear that it is only for the purpose of avoiding taxes. That is tax viewpoint beta. Domestic transfer pricing. वैसे beta international transfer pricing भी है beta. See, guys, people might want to build lower revenues in India because what if they have to pay higher taxes in India? Or on the other hand, but if the tax rates in India are considerably lower as such, guys, they will want to report a higher amount of revenue in India, report lower amount of revenue elsewhere as such, guys. That is why we know better that a lot of corporates as such, guys, especially when they operate in Europe as such better, they will have their headquarters, guys, in Denmark, or they will have their headquarters in Luxembourg, where the taxes are really low, so that it is advantageous to them. All of that is international transfer pricing, domestic transfer pricing. यहाँ पे बेटा we are not talking about arm's length price. I'm not telling you बेटा that it should be fair value, मतलब between two knowledgeable buyers and two knowledgeable sellers as such, guys. The transaction should take place at what price the transaction takes place is fair value. यहाँ पे, guys, fair value as such better is a different thing. It would depend upon how much resources do you have, underutilized, overutilized. A lot of other factors comes into picture better rather than just arm's length price. So ठीक है, guys, all that I told you so far is such better is that, boss, if you are talking about a divisional form of organization, then yes, transfer pricing would play an important role. Transfer pricing would play an important role. This transfer pricing as such better might create issues in the organization, but can also be advantageous. We would be talking about behavioral consequences. We would be talking about behavioral consequences. अभी ये देखो बेटा, one small thing, guys. Does transfer pricing impact the overall profitability of the organization? Does transfer pricing impact the overall profitability of the organization? So, guys, there is division A. There is division A as such, guys. Division A as such beta procures input. So, guys, division A beta procures input at 30 rupees. At 30 rupees. Transfers to division B at 40. So all expenses beta are 30 put together. All expenses are 30. Transfers to division B beta at 40. Division B as such beta, now remember their procurement cost beta is 40. Other expenses, say they are incurring another expenditure as such, guys, of 5 rupees. And their selling price as such beta to external customer. They are selling it to an external customer beta at say 50 rupees. So please understand beta, they are making a profit of 5 rupees. Sorry. They are making a profit of 10 rupees. They are making 6 rupees kar raha hu beta. So they are making a profit of 4 rupees. The organization as a whole beta is making 14 rupees. The organization as a whole beta is making 14 rupees. What if I change the transfer price beta? What if I change the transfer price? Say beta they procure input at 30 only, but transfers are made at transfer to division B beta ऐसे transfer to division B beta it's at 45 rupees. Now for division B as such beta their procurement price is how much? Procurement price is 45. They still have to incur other expenses guys. Other expenses कितना है 6 rupees. What is the selling price beta? Selling price as such guys is 50. So the first division beta will make a profit of 15 rupees because he's procuring at 30 and transferring at 45. The second division as such beta would make a loss of 1 rupee. Would make a loss of 1 rupee guys because his total cost has now become 51, whereas the selling price is 50. But then you will argue, sir, the overall profit made by the organization is still 14 rupees. The overall profit made by the organization is still 14 rupees. Correct, sir? There are transfers between two divisions as such, but then TK, one division is making a profit of 10 rupees, 4 rupees in the first example. Second example, the first division is making a profit of 15 rupees, the other division is making a loss of 1 rupee, overall profit 14. Now you may ask, so there is no impact on the overall profitability. Absolutely better. Transfer pricing has no impact on the overall profitability of the organization. Full stop. Terms and conditions apply. Sir, what? What if guys, division A says that boss I will transfer at 45 only, and division B says even my performance is being evaluated on the basis of profits that I am reporting. Division B beta would simply say that even my performance is being evaluated on the basis of profits that I am reporting. If division A transfers the input at 45 rupees to division B is incurring losses, his performance evaluation goes for a toss as such guys. What if division B simply stops selling the product in the market? To whom will division A supply to? What if division B beta stops selling this product? If division B stops selling this product because they are incurring a loss as such beta, company as a whole beta is not saving the loss of division B. Company as a whole beta is losing 14 rupees. Company as a whole beta is losing 14 rupees. Because of this internal rivalry between division A and B beta, it is costing 14 rupees to the company. What if beta division B starts procuring it from the outside market? What if division B beta starts procuring it from the outside market and does not procure it from division A? Say some outside supplier as such beta is willing to supply to division B beta at 38 rupees only. At 38 rupees only. कोई तो है बेटा जो दे रहा है division B को सस्ते price में. And division A cannot sell this output in the market. Division A cannot sell this output in the market at all as such guys. Company as a whole will still end up losing. So guys, this transfer pricing beta can result in suboptimal decision making. If it results in that suboptimal decision making as such beta, then yes, it has an impact on the overall profitability of the organization. So there's no compulsion beta that transfer price should not have any impact. We will be doing this along with a lot of practical questions. As of now beta, my objective was to just tell you as to will transfer price have any impact on the overall profitability. On a plain reading as such beta, it is like taking from one pocket as such guys and putting it in the other pocket. You are removing from one pocket and you're putting it in the other pocket as such guys. The total amount of resources that you have, the total money that you have is still remaining constant. It is still remaining the same as such guys. समझ में आ रहा है? Yes sir. So guys, let us write few basics better first. Let us write whatever we have spoken about as such guys, and then we will come back to the other aspects. I hope you're understanding guys what is the whole concept of divisional transfer pricing. So here beta we would be learning two important things beta. Multiple guys. See, first is how should the transfer price be fixed? Will transfer prices beta create any behavioral consequences? Will it affect the decision making from the viewpoint of the organization? Transfer prices beta will obviously have an impact on performance measurement and evaluation. Yes, and what should be an appropriate transfer price as such guys from the viewpoint of the organization? Decision making के viewpoint से क्या रहना चाहिए? लिखो guys, all of you guys, right on. Most of the organizations, I will also write better. Most of the organizations are decentralized. Most of the organizations that are decentralized. Day-to-day operations and decision making. Day-to-day operations and decision making are delegated by the top management. Top management guys to Senior, middle or lower level managers. Senior, middle, beta, and lower level managers. Consider this, beta. We have seen, beta, that there was a cabinet shuffle as such, beta. Cabinet shuffle were recently as such, guys. Correct. While I'm recording this classes, beta, there was a cabinet shuffle. Now, guys, why do we have so many ministries as such, beta? Is decentralization. The prime minister cannot handle everything as such, beta, but the prime minister will be held accountable for everything. He cannot say that I have delegated the responsibility as such, beta, to this particular ministry. You evaluate the performance of these ministries as such, guys. You think that these people are not fit for that particular job as such, better you remove them, you reshuffle them. You will want the performance as such, better to be there. So ऐसे देखो ना बेटा, consider the country as a division as such, guys. Prime Minister is the CEO of the Prime Minister is the CEO of India as such, guys. These different ministries as such, better working under them are different divisions as such, guys. The performance is evaluated of these divisional heads as such, better. See, there is delegation of authority as such, guys. They have been given independence as such, better. कि ठीक है, you take decisions. But guys, if the Prime Minister as such, better, is micromanaging things, if the Prime Minister is micromanaging things, what is the whole point of even, guys, delegating authority? Matlab, you in reality you're not delegating anything. You're telling them that, boss, no, you do not have the independence to act. We will take care of everything. It doesn't work like that, beta. It doesn't work like that. So most of the organizations are decentralized as such, better. Day-to-day operations and decision makings are delegated by the top management to senior, middle, and lower level managers. Okay. The degree of decentralization will depend on the degree of decentralization. This is what we've learned in the previous chapter. Will depend on the organizational structure. Will depend on the organizational structure. Organizational structure, guys. We all know better in the previous chapter we have learned it can be entrepreneurial, functional form of organization, divisional form of organization, and a matrix form of organization. Matrix form of organization. Okay. The highest amount of responsibility delegation occurs under a divisional form of organization. The highest amount of responsibility delegation, beta, occurs under a divisional form of organization. I hope you're all writing better. These divisions can either be different departments or different group companies as such, guys. Can either be different departments, guys, or different group companies. The divisions are classified as responsibility centers. We all know that it can be a cost center, it can be a profit center, investment center, and revenue center. Performance of divisional heads, performance of divisions is evaluated based on financial and non-financial measures. Based on financial and non-financial measures. Understood, sir? Divisions are classified as responsibilities, and you will classify the performance of these divisions as such, guys, on the basis of financial and non-financial measures. Yes or no? You would want better these divisional heads better to work as a concept of goal congruence. Yes or no? गोल कॉन्ग्रुएंस याद है बेटा, लास्ट चैप्टर में पढ़े थे? हाँ सर, क्या है गोल कॉन्ग्रुएंस? When you use the word goal congruence as such, guys, it basically means better the divisional goals should be divisional goals as such, guys, should be aligned with as such better the organizational goals. Remember, guys, I told you better that ROI might result in suboptimal decision making. Return on investment better can result in suboptimal decision making. There can be instances better where these divisional heads better are taking decisions that are going against the economic viewpoint of the organization. It is not from the viewpoint of the organization. So yes, better goal congruence is important. I hope everyone is writing this, guys. Abhi beta, what is the most important thing that I told you beta is that there can be transactions. There can be transactions between the divisions. There can be transactions between divisions. There can be transfer of goods and services. Transfer of goods and services. There can be payment for intellectual property rights. Payment for intellectual property rights. जैसे बेटा मारुति सुजुकी pays royalty बेटा to Suzuki. Maruti Suzuki बेटा pays royalty. Pays royalty better to Suzuki. Coca-Cola India pays royalty as such, guys, to Coca-Cola for every bottle sold. Coca-Cola India pays royalty. These are payments better for royal intellectual property rights. Sun lo, guys. And then better there can be loans as such, guys. Loans at specified interest rates. Loans at specified rates as such, guys, between one division to the other division. So whenever there are transactions between these divisions as such, guys, the pricing of the transactions as such, better, the pricing of transactions is divisional transfer pricing. The pricing better for transactions. The pricing for transactions between divisions, guys. Transactions between divisions. Please listen, guys. The pricing better for transactions between these divisions better would become your divisional transfer pricing. Would become your divisional transfer pricing. Remember better, it is revenue for one department. It is revenue for one department and expenditure for the other. And expenditure for the other. It will affect performance evaluation of the division. If they're working as profit centers as such, guys, don't you think better that it will affect the performance evaluation? Yes, sir. Even if they're working as cost centers as such, guys, imagine what if the transfers are being made at a higher cost to the other division. It will still affect better the performance evaluation. Transfer price better will have an impact. Transfer price will have an impact. Transfer price better will have an impact on divisional profits. On divisional profits, which in turn better will affect performance evaluation, which in turn will affect performance evaluation. No one will want better their performance to get affected. Everyone will want to get a higher share of bonus. Everyone will want to get a higher share of profits. So this is where better problems arises. ठीक है, ये कॉपी करो बेटा सब लोग. There can be we do not have a second and third point बेटा. We only have loans at specified rates. We only have loans at specified rates. Yes, beta. Now, guys. Now, beta, I hope you're all done with this. There's something called as what is the aim of a transfer pricing system? Why do you even need? क्या है यार ये? Why do you even need a transfer pricing system and the utility of transfer pricing? I will want you to remember utility as such, guys. दोनों सेम ही रहेंगे बेटा. So when they say aims of a transfer pricing system as such, guys, the first objective बेटा, any transfer pricing policy that you are putting in place as such, guys, it should encourage goal congruence. This बेटा we have learned, guys, in the previous chapter also. A good performance measure as such बेटा should motivate the employees to achieve the goals of the organization बेटा while ensuring that their own goals are met. It should be based as such बेटा there on controllable factors as such, guys, and then बेटा और क्या था बेटा, हाँ, it should take both long term and short term objectives, guys. तो यहाँ पे बेटा it should encourage goal congruence as such, guys. It should enable realistic measurement of divisional profits as such, guys. Sustain high level of management efforts, give autonomy to managers to ensure profit maximization. The first point and last point are related, guys. When you say, guys, goal congruence as such, guys, it is basically maximizing organization profit as a whole as such, better. It should provide as a realistic basis, guys, realistic measurement of divisional profits. मतलब not just goal congruence, not just profit maximization of the entity as a whole, but it should also give us a basis for measuring the efficiency and the effectiveness of all of these divisions, guys, to measure their performance. And then beta give us if you have a transfer pricing system in place as such, beta, you're basically giving autonomy to these managers as such, guys. Matlab, you do not have to interfere. You're telling them that, boss, you have the independence, you decide what is to be done. So that independence is being given to these managers. That independence beta is being given to these managers. Understood, sir. Utility of transfer pricing में बेटा देखो, what are the uses of a transfer pricing system? Undoubtedly बेटा transfer pricing system is used for the purpose of performance measurement and evaluation. Yes, sir. It is used better for a purpose of deciding what should be the compensation that should be paid to the employees. So if you're measuring performance of a particular division as such, guys, obviously you will also know what is the compensation to be paid to them as such, guys. It will be used for the purpose of resource allocation, guys. Once you know what is the amount of divisional performance, you will know which division needs more investments, which division needs more resources. And finally better taxation and profit remittance. You can always use transfer pricing system as such, guys, to increase as such, guys, the earnings. If you have a presence in multiple countries, you can plan your taxes better. समझ में आ रहा है. सो गाइज व्हेन दे से एम्स ऑफ अ ट्रांसफर प्राइसिंग सिस्टम, गाइज लिख लो मेरे साथ, ये पूरे नॉर्मल पॉइंट्स है बेटा. आई वुड सी व्हेन समवन सेज, गाइज, ट्रांसफर प्राइसिंग सिस्टम क्यों, फर्स्ट आई थिंक आई टेल देम, बॉस, दिस इज यूज्ड फॉर परफॉर्मेंस मेजरमेंट एंड इवैल्यूएशन. नो, इफ यू डू नॉट सेट अ ट्रांसफर प्राइसिंग सिस्टम इन प्लेस, हाउ विल यू इवैल्यूएट द करेक्ट प्रॉफिटेबिलिटी? दिस इज अ मेजर इशू व्हेन इट कम्स टू परफॉर्मेंस इवैल्यूएशन. This will decide the compensation to be paid to the employees. This will decide resource allocation as such, better. This will also help you better in managing your taxes if you have presence in multiple countries. So aims of transfer pricing system. Aims of transfer pricing system, guys. The first important aim better of a transfer pricing system is, the first important aim as such better is goal congruence. Goal congruence. Profit maximization of the company. Profit maximization of the company, guys, of the organization as a whole. Profit maximization of the company, guys. There's goal congruence better, there's profit maximization of the company, aims of a transfer pricing system. And then, guys, I told you better क्या है ये, हाँ, performance measurement as such, guys. Measurement of profits, measurement of divisional profits. Give them a little autonomy as such, guys. Autonomy to managers. These are the aims as such, guys, of a transfer pricing system. And then beta, when it comes to the utility of transfer pricing system, remember utility yaad rakhna exam mein. Utility of transfer pricing system, guys, as to how transfer pricing system is used. First one beta is to measure performance. Performance evaluation of divisions, guys. Performance evaluation of divisions. Computing the compensation payable to employees. Computing compensation better payable to employees. Payable to employees. Right, sir? Then better resource allocation. Resource allocation. Better performing divisions would get higher capital, higher resources. Better performing divisions will get higher resources. You will know better which division needs what resources. Will get more resources. And finally, better planning taxes. Planning taxes. If present better in multiple nations. If organization has presence in multiple countries. Has presence in multiple countries. Understood, sir. Understood, sir. These are all the points, guys. Please make a note of it better. All of you guys make a note of it. Yes, guys. I hope you're all done with this. So far, but I just told you as to why do we even have the concept of transfer pricing as such, guys. Because an organization has decentralization, they work as responsibility centers. We have to measure their performances, and also there are transactions between divisions. That is all better results in divisional transfer pricing. That is all results in divisional transfer pricing as such, guys. And that divisional transfer pricing as such better, that divisional transfer pricing as such, guys, will help us in measuring performances, in deciding the compensation payable, better allocation of resources, and planning our taxes. Okay, sir. Now, guys, I told you about a question of fair value will के है, guys, small part. When it comes fair value है क्या ये fair value? See, guys, in taxes beta, in taxes fair value, guys, is arm's length price. Fair value beta is arm's length price. When you use the word arm's length price as such, better it is between two knowledgeable buyers and sellers as such, guys, that a transaction occurs, that a transaction takes place. That is called as arm's length price, guys. यहाँ पे ऐसा कुछ नहीं है बेटा. In this chapter, it is not like you'll have to just write arm's length price. In transfer pricing as such, beta, in transfer pricing, when we use the word fair value as such, beta, it will depend on the bargaining power of the buyers and sellers. Depend on the bargaining power. Something that is giving you a good deal as such, guys. Anything that gives you a good deal as such, beta, that will become an appropriate transfer price. समझ में आ रहा है? Yes, sir. Now, guys, the biggest thing, beta, is will transfer pricing impact the profits of the division, profits of the overall organization, profits of the overall organization. Will transfer pricing beta impact the profits of the overall organization? We will write this example beta that I gave you earlier. We will write this example beta and then come to that part. Okay, I just एक second beta. One second, guys. All of you copy this, but I'll give the conclusions. Copy this, guys. सब लोग ये नोटबुक में लिखोगे जस्ट व्हाट इज द फेयर वैल्यू एंड एवरीथिंग. Yes guys, I hope you're all done with this. I hope you're all done with this. Likho beta now. Write better. I have already given you the conclusion guys. Likho. Irrespective of the transfer price. Irrespective of the transfer price. Irrespective of the transfer price. The overall profits of the organization. Irrespective of the transfer price. Of the transfer price. The overall profits. The overall profits of the organization. Overall profits of the organization will remain same. Will remain same as long as the output of the organization does not change. As long as the output of the organization does not change. As long as the output of the organization does not change. So this is better where you talk about, irrespective of the transfer price, the overall profit of the organization better will remain same as long as the output of the organization does not change. Output of the organization does not change. See guys, for example, if division B stops selling the product, लिख लो बेटा, stop selling the product on account of losses, the company as a whole will lose, 14 rupees. Will lose 14 rupees. If division A cannot sell it in the outside market, if division A cannot sell the output in the outside market, cannot sell the output in the outside market, if division B as such better stop selling the product as such guys on account of losses, the company as a whole as such better will lose 14 rupees. So that is basically better division A cannot sell the output guys in the if division B A cannot sell the output in the outside market. Okay guys. So now this results in suboptimal decision making. This results in suboptimal decision making. Yes, but this is suboptimal decision making. This is not goal congruence, but you are not working for the overall profitability of the organization. Another example is such, beta, what if division B procures from outside market? If division B, beta, say procures from a supplier, at 38 rupees. At 38 rupees as such guys. So total cost of division B would be 38 plus additional 6 rupees, 44 rupees as such guys. Profit of division B beta. Profit of division B is 6 rupees. No profit made by A. No profit made by A beta because there are no internal transfers. So overall profit beta made by the company is still 8 rupees. Overall profit guys is still 6 rupees beta. 6 rupees. So instead of 14 beta, company is now making only 4 rupees instead of 14. Again, but I'm assuming that division A cannot sell it in the outside market. If there is an external market as such, beta, we will see what is the significance. अपन सब पढ़ने वाले beta as to what should be the minimum transfer price for the purpose of goal congruence, what should be the maximum transfer price for the purpose of goal congruence. We are going to read each and every point. Do not worry. So instead of 14 guys, company is now making only 6 rupees. Company is now making only 6 rupees. Isn't that suboptimal decision making? Yes, sir. Earlier, beta, the total profit made by the company was 14 rupees, but because this division beta is procuring it from outside as such beta, they're now making a profit of only 6 rupees, guys. Understood, guys? Understood, sir. Please copy this beta. Then we'll talk about different transfer pricing methods. I hope you're understanding better. I'm telling you that by default as such guys, it will have no impact on the overall profitability. By default it will have no impact on the overall profitability guys. However, remember beta, there are factors that can affect. Hello guys, I hope you're all done with this. I gave you a lot of time as such better. Now guys, there are different transfer pricing methods guys in this chapter. Transfer pricing methods. The first method that we are going to do better is market price, market based transfer price, market based transfer price better. And then better there's something called as shared profit relative to cost, and then beta there is cost based transfer price, cost based beta. Under this also guys, they can only be cost or they can be cost plus markup, beta. Under cost also as such beta, it can only be marginal cost, it can be standard cost or a full cost, standard cost as such beta. And then beta there is full cost. And then beta the most important one, negotiated transfer price. Isme beta there's nothing to calculate, but then negotiated transfer price. These are the transfer pricing methods. Let me just discuss market based transfer pricing method beta, and then we can copy all of this. Sun lo beta. Market based transfer pricing method beta is used when there is a market that exists for the intermediate product. When I'm using this word intermediate product as such beta, it is a product that is being transferred by one division to the other division guys. So when there's a product beta that exists for this product that is being transferred, market that exists beta for a product being transferred, we can use market based transfer pricing method. So under market based transfer pricing method as such beta, transfer pricing should be equal to your market price adjusted for any cost savings due to internal transfers. If there are any cost savings, like I may not have to incur variable selling and distribution cost as such beta. So if you do not have to incur variable selling and distribution cost, you will not want to allocate a share of guys, selling and distribution fixed cost. So all of that beta can be eliminated. So savings on account of internal transfers should be adjusted as such guys. Market price savings on account of internal transfers, they should be adjusted. Now guys, iska advantage and disadvantages kya hai beta? Advantage as such beta is that you know beta that market price will exist, it will be a fair value as such guys, it will be a fair value, and this would result in proper performance evaluation. Market price is fair beta, this is what we assume. Of course this will also come as a disadvantage as to what if market prices are distorted, what if there is distress selling in the market as such beta, what if there are wide fluctuations in prices, what if there are wide fluctuations in the prices of the product that we are talking about. So otherwise as such beta, this would be a proper way as such beta to check the to measure the efficiency and effectiveness of the performances as such guys, if it is market based and if there's a market that exists for the product, if there is market based as such beta and a market exists for your product. Okay sir. Other advantages as such beta is that market based mein whoever is the transferring division as such beta, it will result in proper recovery of all costs, will also give beta jo bhi apna transferring division hai guys, it will result in proper recovery of cost beta, it will also result in proper profits being accruing to them as such guys. There will not be any opportunity cost, beta. It says since demand and supply determine market price, it is likely to be unbiased. Market prices are less ambiguous compared to cost based pricing guys, they cannot be manipulated. Cost based pricing mein beta you can manipulate your internal cost. Divisional performance can be linked more objectively beta to its contribution to the company's overall profits. And then beta, in a competitive market, goods and services cannot be transferred to its users at a higher price. Takes into account demand. Opportunity costs are fully recovered guys, they provide reliable measures of divisional income. Disadvantages beta, as I told you as such guys, what if the transferring division has too much of surplus capacity beta that he anyways wouldn't have been he wouldn't have sold in the external market. What if the transferring division has a too much surplus capacity beta that he wouldn't have anyways sold in the market. If you're still transferring goods at market prices such beta, you're giving it way too much advantage to the transferring division. Transferring division has too much of advantage as such guys. What if there is no market beta that exists for the intermediate product? Behavioral consequences mein beta, remember market based transfer pricing method will always result in better motivation as such guys. All the divisional managers will be motivated to perform better as such beta, they will obviously guys work on reducing the overall cost. There will be cost competitive operations as such guys, they'll continuously strive as such better to reduce their overall cost that are incurring cost that is being incurred guys, so that the overall profitability increases. But again beta, as I told you, it might also create this internal rivalry as such beta, wherein the division that is receiving goods as such guys might complain that the other division does not have so much of opportunity cost, the other division has too much of surplus capacity, still is getting a very good share of profits. So that can always be there guys. समझ में आ रहा है सर. ये लिखो बेटा पहले. आई राइट नोट्स अबाउट मार्केट बेस्ड ट्रांसफर प्राइसिंग सिस्टम. आई एम वेरी मच कंसर्न अबाउट बिहेवियरल कॉन्सिक्वेंसेज ऑफ एवरी मेथड गाइस. दे माइट आस्क दैट इन द एग्जाम. I am concerned about behavioral consequences of every method, guys. Of every method. Yes, guys. The first one with a market based transfer pricing method. Let us all write it, guys. The first one बेटा is market based transfer pricing method. Okay. तो यहाँ पे क्या होगा बेटा under market based transfer pricing method, guys. So this method बेटा, when is it useful, guys? First, there should be a ready market बेटा. There should be a ready market for intermediate product. There should be a ready market better for intermediate product. Okay, for intermediate product, transfer price better would be equal to external price. External price. External price better plus or minus better adjustment for cost savings. Cost savings on account of internal transfers. जैसे बेटा से variable S&D is not incurred on internal transfers. Variable S&D is not incurred on internal transfers. You can always reduce that as such better. ठीक है? Yes sir. Appropriate, guys. When will this be appropriate? Appropriate beta when you're transferring division, or what is the word beta that they use? Selling division. When selling division has no idle capacity, when selling division has no idle capacity, and can sell the entire output in the external market, and can sell output in external market, has no idle capacity but and can sell output in external market. Okay, yes sir, this is where beta this will be appropriate. Inappropriate is such beta, or say when selling division guys has idle capacity, it would result in too much of selling division beta will have advantage. Selling division beta will have an advantage if transfers are based on market price. Will have an advantage if transfers are based on market price. If transfers are based on market price. Understood, sir. Market based transfer prices are better. There should be a ready market for the intermediate product. Your transfer price better should be equal to external price plus or minus adjustments better for cost savings if any. Then beta variable S&D beta is not incurred on internal transfers. Appropriate beta when selling division has no idle capacity and can sell the output in the external market. ये लिखो बेटा, ये सब कमेंट्स में आते हैं बेटा. ऑल ऑफ दिस कम्स एज कमेंट्स. जल्दी जल्दी लिखो गाइस. विल टॉक अबाउट द एडवांटेजेस एंड डिसएडवांटेजेस. Hello, but I'm assuming that you're all done with this. You've all written it. You were all supposed to do it with me only, guys. What are the advantages and disadvantages of market-based transfer price, guys? This is market-based transfer price, but I'm simply transferring the product beta between two divisions on the basis of prevailing market prices, plus or minus beta savings, if any, that is arising due to your internal transfers. Advantages क्या beta? Market price. Advantages beta is that market price is based on demand and supply and is unbiased. Market price is based on demand and supply beta and is unbiased. Yes or no? Yes sir, it is unbiased. First important advantage is that beta, it cannot be manipulated like cost. It cannot be manipulated like cost beta. Can it be manipulated like cost? No, it cannot be manipulated. साथ में लिखो बेटा, it cannot be manipulated. Hardly any theory, guys. After this we just have to do what are the effects of transfer pricing system and then done, guys. बाकी पूरे से problem solving की almost around 40 problems. It cannot be manipulated like cost as such, better evaluation of divisional profits, better evaluation of divisional performance as such. Obviously, guys, if it is based on market price, it will result in better evaluation of divisional performance as such, guys. Anything else as such beta here? It will full opportunity cost beta is recovered. Full opportunity cost beta will be recovered. Full opportunity cost will be recovered as such, guys, if selling division as such beta can sell entire output. So because you're pricing it as such beta external cost, the selling division is not losing out on anything. The selling division beta is not losing out on anything, guys, because they're pricing the product at still market prices. Can sell the entire output. If they can sell the entire output. Understood, sir. What are the disadvantages beta? Market price as such, there can be distress price. Market price beta may not be a fair value. What if beta there is distress selling in the market? There is distress selling in the market as such beta, resulting in very low price. Possible, sir. What if there is no market only beta? What if there is no market beta for intermediate product? I cannot use this model. If there is no market only beta for intermediate product, guys, we cannot use this. Yes or no? What if market prices are fluctuating, guys? Market prices are fluctuating a lot as such beta, they do not remain constant. What if there is idle capacity as such, guys? There is idle capacity in selling division. In spite of that as such beta, they're transferring all the goods at market prices. Obviously beta, the purchasing manager might not buy from him, he might buy better from the outside market. From the outside market. Yes or no, sir? Yes. Behavioral consequences beta, when you say behavioral consequences as such beta, what would be the impact of this? What would be the impact of this? Please do not forget beta, the selling division is competing with the outside suppliers. The selling division is competing with the outside suppliers, so this will obviously result in better cost improvement. Selling division beta competes. Selling division beta competes with our external supplier. Selling division beta competes with external supplier, resulting in performance improvement. This is very good beta from the viewpoint of the entire organization, resulting in performance improvement. This is one of the biggest drawbacks beta of cost based transfer pricing. They will never be motivated, guys. They will never be motivated as such beta to work on improvements, because anyways they know beta that they're guaranteed of full recovery of cost. Full recovery of cost. So guys, selling division competes with the external supplier, resulting in performance improvement as such, guys. Performance improvement. Also, guys, both the divisions as such, guys. Both the divisions beta will work on performance improvement. Both the divisions will work on performance improvement. Performance improvement. And finally, beta, remember, guys, if you're procuring it internally, internal transfers beta are usually as per specifications. As per specifications as such, guys. Supplier से अगर खरीदोगे ना बेटा, supplier से if you buy as such, guys, there can be quality issues. They can be quality issues. Copy करो, guys. These are the advantages and disadvantages of market based transfer price. Of market based transfer price. Quickly do it, guys. I hope you're all already done with the advantages बेटा. ये तो हो ही गया था सबका. Yes, guys. The second method, beta. This is market-based transfer price, guys. The second method, beta, is shared profit relative to cost. What we do, beta, is we arrive at overall. Pay attention, guys. This is similar to market price pricing method only, beta. You arrive at total profit of the organization. Arrive at total profit of the organization, guys. Of the organization, and divide, beta, and divide in the ratio of cost. Simply divide as such, guys, in the ratio of cost incurred by each division, that is value added by each division. That's it, beta. This is what we do, guys. एक काम करेंगे बेटा. Now we will proceed to problem solving as such, guys. All of you better can go to the other notebook. We will solve two questions based on this, guys, and come back to the other transfer pricing methods, beta. Cost base and transfer pricing. बाकी पूरे करते हैं बेटा. First let us finish these two. Okay? Yes, sir. Yes, beta. Let us finish this. ये लिख लो बेटा, and then we will first finish two questions beta based on this, and then come back to the other concepts. Come back to the other concepts, guys. You copy करो बेटा सब लोग. All of you copy this. Then we will do question number 3. We would be doing question number 3, guys, after that. Question number 3, guys, if you're all done with it. Do not forget beta, solve it in your problem solving notebook. Page number 9.11 beta, question number 3. Page number 9.11. A manufacturer of cornflakes has two divisions. One producing cornflakes and the another packaging division beta that manufactures the cartons. The production division purchases all the cartons from the packaging division. Production division beta is purchasing all the cartons beta from the packaging division. Cost of cartons from outside vendors would be, if they procure 5,000 cartons from the outside vendor beta, it will cost them 77,000, and if they procure 8,000 cartons beta, it will cost them 95,000. Production cost incurred by the packaging division beta for similar volume of cartons. 5,000 के लिए बेटा they are incurring a cost of 75,000, and 8,000 they are incurring a cost of 80,000. The production and sale of the final product cornflakes are below, guys. Volume beta 5,000 cartons sold. Total cost excluding the cost of cartons is 1,20,000. Sale value is 2 lakhs. For 8,000 beta it is 1,80,000. Sale value is 3 lakhs. An appropriate transfer pricing policy is being framed as a corporate management accountant. Calculate the transfer pricing based on shared profit relative to cost method and market method. Show the profitability of each division, guys, under both these methods. Discuss the effect of both the methods, guys, on profitability of the divisions. I have read the question, guys. I would want you to read the question. I will wait for 2 minutes. This is the very first question. Read every line properly, and then I'm going to explain it. Guys. Please go through the question, guys. All of you better understand the question properly. Yes, guys. I hope you all read the question better. Did you also start computing it? नहीं सर, क्यों करेंगे? So here, guys, what they gave beta is what is the market price if you procure 5,000, if you procure those 5,000 divisions as such, guys, 5,000 packets from outside, what will be the cost? Question number 3 beta. See, please understand beta that there are two divisions. There are two divisions, guys. This packaging division, and then beta there is packaging division है बेटा, और दूसरा क्या है बेटा अपना production division. Okay. External procurement price is given, but external supplier price is given. Matlab, if in case you want to purchase from outside as such, beta, what would be the market price is given, guys. This would become the market price. This would become the market price. Yes or no? They are asking us, beta. They are asking us as such, guys, to arrive at the transfer pricing as such, beta, based on shared profit relative to cost. We will have to share profit beta based on cost, and also beta based on market method. Show the impact on profitability, guys, of each division under both the methods. Please understand, guys, carefully as such beta samjho. Method 1, guys. Method 1. I hope you're all listening, guys. Shared profit relative to cost. We will have to share profit beta relative to cost. Okay, sir. At 5,000 cartons, total cost is how much? So total cost as such beta incurred by the first division. Total cost beta incurred by the first division. I will present it like this beta. So there is this packaging division. There is this production division, and I will write total beta, total. The cost incurred beta by packaging division as such, guys, for 5,000 cartons is 75,000, guys, and production division is 1,20,000. Total amount is 1,95,000. This is your total cost. Please understand beta that the sale value, guys, is beta is 2 lakhs. Sale value is 2 lakhs as such, guys. So your overall profit is 5,000. Guys. So here beta I will divide profit of 5,000. Guys, in the ratio of cost. Incurred beta by these divisions. So that will be 5,000, guys, into 75 divided by 195. 1923, guys, minus 5,000, 3,077. So please understand better, the cost of packaging division beta is 75,000. So my transfer price is such beta. ट्रांसफर प्राइस बेटा फॉर 5,000, अभी प्रॉफिटेबिलिटी स्टेटमेंट वापस बनाता हूँ बेटा, टेंशन मत लो. फॉर 5,000 कार्टन सच गाइस इज 75,000 बेटा प्लस 1923, दैट इज 76,923. दिस विल बी योर ट्रांसफर प्राइस सच बेटा फॉर 5,000 कार्टन्स. दिस इज वेयर आई एम डिवाइडिंग ओवरऑल प्रॉफिट बेटा इन द रेशियो ऑफ कॉस्ट इंकर्ड. ओवरऑल प्रॉफिट मेड बाय द ऑर्गेनाइजेशन वुड बी 5,000. Forget the external supplier price, guys. First division is incurring 75,000. The other division is incurring 1,20,000. Put together beta these people are incurring 1,95,000. Overall cost beta is 1,95,000. Overall revenue beta will be 2 lakh rupees. So the organization is making a profit of 5,000. Individually it is 1923 and 3,077. Now this is for 5,000 beta. This is for 5,000 units. 5,000 units. What if it is for 8,000 cartons? 8,000 cartons beta. I'm just writing transfer price beta first, then I'll compute profitability statement. And sun lo ghado, please do not copy, guys. Irritate mat karo. There is packaging division, there is production division, and then beta there is total. The cost that is incurred as such beta, the cost incurred by packaging division beta for 8,000 cartons beta is 80,000. Cost incurred by production division beta is 1,80,000. Overall cost is 2,60,000. 2,60,000. Sale value beta is सेल वैल्यू 1,80,000 and 80 उतना ही है ना बेटा. 2,60,000, 3 lakhs is such, guys. So overall profit beta here that the company would make beta is 40,000. Overall profit that they will make beta. You will have to divide 40,000. You will have to divide 40,000 as such, guys, in this ratio now. You will have to divide as such beta 40,000 in this ratio. In the ratio of 80 is to 180 beta. 40,000 into 80 divided by 260, guys. 12,308 rupees. And here 27,692. 27,692. यहाँ पे बेटा per unit कितना है transfer price? I can write 76,923 divided by 5,000 cartons. Obviously, the first division should make a profit of 1923 as such, guys, and then we know better that the overall value is overall you output beta is 5,000. So this is 15.3846. This is your transfer price beta here, and यहाँ पे beta total transfer price as such, guys, would be total transfer price beta. They are incurring a cost of 80,000. Transfer price beta for 8,000 cartons would be 80,000 plus 12,308 profit that they have to make 92,308 per unit. कितना हो जाएगा बेटा? Per unit it will be 92,308 divided by 8,000 cartons. There is undoubtedly beta economies of scale divided by 8,000. 11.5385. 11.5385. This beta would be your this beta would be the amount of your internal transfer price. Understood, sir? This is, guys, for 5,000 units and 8,000 units, guys, method 1. If you talk about method 2 as such beta, method 2 transfer price beta is equal to, I will present profitability statements, please pay attention, is equal to market price, is equal to market price as such, guys. So for 5,000 at 5,000 cartons, at 5,000 cartons beta, transfer price, guys, should be equal to your external supplier price of 77,000. So per unit beta it will be 15.4. Divide that beta. Add 8,000 cartons as such, guys. At 8,000 cartons, transfer price as such, guys, should be 95,000 rupees. Per unit as such beta it would be 95,000 divided by 8,000 beta. कितना हो गया? 11.875. I have only computed transfer price, guys, at both the places. ठीक है? You can now copy these transfer prices and then we'll present profitability statement. It says show the profitability, guys, of each division under both the methods. मतलब 4 times profitability statements, guys, under each method for both the volumes. For both the volumes. First copy this, guys. All of you copy this बेटा. सब लोग ये copy करना शुरू करो. Yes, guys, I hope you're all done with this. करो बेटा ये जल्दी. Here, guys, 8,000 cartons. You all done with this? ये कॉपी करो बेटा. Finally, we'll now compute profitability statements. I hope you're all done with this बेटा. 8,000 cartons का calculation. I hope you're all done with this बेटा. I hope you're all done with this. ठीक है? Yes, sir. So this is method only computing transfer price. Let us now compute profitability statements. Profitability statements, guys. Sir, we already did. No, sir. You still have to present better properly. Method one. Method one, guys. 5,000 cartons. 5,000 cartons. Do not forget better transfer prices 52,000. 76,923. 76,923. So there is packaging division. All of you do it with me, but this is now repetition. You just have to write profitability, guys, at all of these points. Packaging division, production, and total, guys. Total. Revenue, better. Revenue. Remember, guys, there is internal transfer better from packaging division 76,923. Then better there are external sales. External sales as such, guys, made by production department better is 2 lakh rupees sales value. Overall revenue of the organization, I would say, only is 2 lakhs better. Revenue of the organization is not 2,76,000. Less better cost. Cost incurred as such, guys. Internal transfer as such better is a cost of 76,923. Whereas beta other costs that they are incurring as such, guys. Here beta the cost is 75,000. Here guys the cost is 1,20,000. So if you see the amount of profit beta overall as such beta by the organization would only be 1,95,000. So the revenue of one beta is the cost of other. Always remember that. This is 1,923. You will have to present like this, guys. You will have to present like this beta for all under all the cases. 3,077 and 5,000 rupees. And 5,000 rupees. 1923 beta 3,077. Okay. This is first profitability statement, guys. I will zoom in, guys, so that you can copy this, and from the next one beta we'll do it together. We have to do 3 more statements like this, guys. We will have to do 3 more statements like this, guys. There are 3 more statements. I hope you're all done with this beta. Now let us do, guys, same method one only beta, but 8,000 cartons. नहीं हुआ तो pause कर लेना बेटा. Method one only beta, but now 8,000 cartons. 8,000 cartons, guys. We are seeing what is the impact of this transfer pricing beta on profitability. The transfer price of 8,000 cartons beta that we have computed is 76,9. 92,308. 92,308 as such, guys. करो बेटा सब लोग. 92,308. Sir, are you going to copy like this? So here, guys, my internal transfers as such, guys. The amount of internal transfers as such beta is 92,308, whereas external sales beta made by the other division beta is 3 lakhs. Overall revenue of the organization will remain at 3 lakhs only. Overall revenue beta will remain at 3 lakhs. There is a cost of 92,308 beta for production department internal transfers. 80,000 beta is the packaging cost here. And then beta here the cost is 1,80,000. So yes, overall organization still has a cost of only 2,60,000. Overall organization is making a profit of 40,000, wherein this fellow is making a profit of 12,308. Here, guys, 27,692. This would be the profit, guys, under method 1, guys, for 8,000 cartons. I hope you're all doing it better. Fatafat khatam karo. Same thing, guys, now we'll have to do at a market price of 77,000 and 95,000. We will have to do market price better 77,000 and 95,000. What if you take transfers better at 77 and 95? What would be the impact on profitability? What would be the impact on profitability? Yes, guys, I hope you're all doing this. I hope you're all doing this better. I'll zoom in, guys. This is method 1 only, but 8,000 cartons. Yes guys, the other methods बेटा profitability. ये हो गया बेटा method 1 here. Now guys, method 2 guys, that is transfer price beta is equal to market price. You know beta transfer price beta for 5000 units is equal to 77,000 rupees. 77,000 rupees. We'll have to recompute profitability beta here. We will have to recompute profitability beta here by taking a transfer price of 77,000 guys. By taking a transfer price beta of 77,000. Only these internal profits will change as such guys. Overall profits beta would still remain at beta at 5,000 only. 2,000 beta here. They're also the profit is 3,000 beta, so the overall profit is 5,000. Overall profit is 5,000. Method 2 guys. I'm finishing off both beta. तुम लोग भी खत्म कर दो. Transfer price beta for 8,000 units. You'll be like, sir, क्या question है sir ये? Tension मत लो बेटा. Only one of this kind. Transfer price beta is 95,000. There are huge economies of scale as such beta that are occurring. So here guys, we do not know the amounts. The transfer price is 95,000 guys. They will sell the output at 3 lakhs. Overall revenue as such beta would be 3 lakhs as such guys. They will have a transfer cost of 95,000. Cost incurred is 1 lakh 80. Cost incurred is 80,000 as such beta. Here guys it is 2 lakh 60,000. And here guys nothing. Total profit is 40,000. 15,000 as such beta. And here it is 3 lakhs minus 1 lakh 80 minus 95,000. 25,000 rupees. These are your profitabilities. We just have to write the comments as such better now. All of this was method 2 only better. We just have to write the comments part better now. Comments part. Check karo guys. All of you better please check. सबका हो गया बेटा ये ट्रांसफर प्राइस ऑफ 5,000 यूनिट्स गाइस 77,000. Yes guys, I hope you're all done with this. Now beta, what are the conclusions that you draw out of it as such guys? See guys, it is very clear beta that the company as a whole beta is benefiting from a higher volume guys. There are economies of scale as such guys, and the company is able to increase their profit from 5,000 to 40,000. Yes or no? Irrespective of the method of transfer pricing followed as such beta, the overall profit will remain same because it is not affecting the output. It is not affecting the output. But then we do not want as such beta to we do not want that to affect the output as such guys. Please understand guys. Understand better here. First thing, irrespective of, पहले समझा देता हूँ बेटा, बाद में we will write together. See, irrespective of which transfer pricing method are they following as such guys, whether they're following shared cost method or whether they're following market price method, the profitability of the company as such beta will remain at 5,000 rupees for 5,000 units, 40,000 rupees for 40,000 units. Only the internal profitability as such beta would change depending on the transfer price. This is the very first concept that I've explained in today's class. Will transfer pricing have an impact on the overall profitability? No, as long as the output of the company is not changing. However, beta, if you see guys, when they are shifting from 5,000 to 8,000 units as such beta, the packaging division has huge economies of scale. Their cost per unit beta was 15 rupees. Was 15 rupees beta at 5,000 units, and it has come down to 10 rupees as such guys. It has come down to 10 rupees. Whereas beta, for the production division as such guys, the cost per unit reduction is not that great beta. It was 24 rupees and it became 22.5, from 24 to 22.5 as such guys. So that is why beta, when they're dividing profits on the basis of cost as such guys, undoubtedly beta, the production department would get a higher would be in an advantageous position as such guys, and that is why they're getting a higher share of profits guys. That is why they're getting a higher share of profits. Are we clear about this? Yes sir. उतना ही लिखना है बेटा और कुछ नहीं लिखना है. इतना बड़ा भाषण दिया ना बेटा, जरूरत नहीं है. Write down guys. Irrespective of the transfer pricing methods followed, the overall profitability of the company would remain same. 5,000 rupees at 5,000 units and 40,000 rupees at 8,000 units. There is no impact on overall output. Yes or no? Or another thing beta is that yes, companies should operate beta at a volume of 8,000 units. 8,000 units. साथ में लिख रहे हो ना बेटा, company should operate at a volume of 8,000 cartons. Your packaging division beta, guys, will prefer market price. Packaging division beta will prefer market price as the basis. For transfers. Market price as the basis of transfers, but as it would result in higher profitability. For them guys, higher profits better profitability for packaging division. As it would result in a higher profitability as such beta for packaging division. And guys, your क्या ये दूसरा production division, I hope you're all writing beta. Production division guys, will normally prefer what? It will still prefer as such beta shared profit method, because it is resulting in a higher profit to them. Understood sir? If you compare beta cost per unit, beta for packaging division, guys, cost per unit for packaging division guys, there's huge economies of scale guys. At 5,000 units beta, it is 75,000 by 5,000, 15 rupees. And at 8,000 units as such guys, it is 80,000 by 8 beta, 10 rupees. There are too many economies of scale as such guys. Too much of economies of scale impact. Well, if you look at for production division guys, at 5,000 units beta, it is 24 rupees. 1,20,000 divided by 5,000 beta, 24 rupees. 8,000 units pe beta, it would be 1,80,000 divided by 8,000 as such guys, we got 22.5. So undoubtedly beta the economies of scales are more. Economies for scale beta, economies of scale guys, for scale economies of scale beta is higher in case of packaging division, is higher beta in case of packaging division. As production division beta is incurring a higher cost, production division beta is incurring a higher cost, they are getting a higher share of profits. As production division beta is incurring a higher cost, they are getting a higher share of profits. They are getting a higher share of profits. समझ में आ रहा है बेटा? Higher share of, they are getting a higher share of profits guys under shared profit method. Under shared profit method. Understood sir? Yes sir. Please write guys. This is all the comment as far as that. देखो कितना हुआ है कितना नहीं हुआ है guys. Chalo guys, I hope you're all done with this better. Now let us proceed to the next question guys. Let us proceed to the next question beta. Question number 2 guys. We will solve question number 2 guys now. The two manufacturing divisions of a company is organized on a profit center basis. Division X is the only source of a component required by division Y for that product P. Each unit of P requires one unit of the said component. Division X beta is the only source of component required by division Y beta for their product P. Each unit of P requires 1 unit of the said component. As the demand of the product is not steady, guys, orders for increased quantities can be obtained by manipulating prices. We did this better under pricing decisions. I repeat better the third sentence, listen carefully. As the demand of the product beta is not steady, orders for increased quantities beta can be obtained by manipulating prices. By manipulating prices. Remember beta profit maximizing selling price. I told you there are two cases beta under profit maximizing selling price. What is the relationship between change in price and change in demand is linear, and what if it is non-linear? If it is non-linear, they will give us different prices. We simply have to compute contribution at different prices, and whichever price results in the highest amount of contribution, that price is selected. However beta, if they give us the relationship is linear as such, guys, I can use marginal revenue is equal to marginal cost as such beta. Marginal revenue price function will be given, guys, a minus bq. Marginal revenue will be a minus 2bq. We will equate marginal revenue to marginal cost as such, guys, and arrive at the quantity at which the profit is maximum, and accordingly compute profit maximizing selling price. Yes sir. यहाँ पे बेटा different prices are given. Undoubtedly the relationship might not be linear as such, guys. We'll directly compute profitability at different prices. This is manager of division Y, guys. The manufacturing cost excluding the cost of component from division X of P beta from division X is 14,06,250 for first 5,000 units, and thereafter beta 56.25 in excess of 5,000 units. In excess of 5,000 units. Division X incurs a total cost of 5,62,500, guys, for an output of up to 5,000 components, and the total cost beta will increase by 3,37,500 per day for every additional 5,000 units manufactured. So the cost structure is given, guys. How much is the cost that you're incurring for first 5,000 units? Thereafter, how much cost will you incur, guys? Division X has set a transfer price of 90 rupees to optimize the performance of his division. So guys, no questions asked. Do not use brain. How did they arrive at 90 rupees? Nothing, not relevant. Division transfer price is 90 rupees. You're required to prepare a divisional profitability statement at each level of output, guys, for division X and Y separately. Find out the profitability of the company as a whole, guys, at the output level where division X's net profit is maximum, where division Y's net profit is maximum. Also find out at what level of output whether the company will earn maximum profit if the company is not organized on a profit center basis. Understood, sir? I would want you to go through the question once, guys, and then I'll start solving it. All of you better go through the question. Go through the question, guys. I hope you're all going through the question, guys. You're all reading it. Yes, but I'm assuming that you've all read the question. The answer is simple beta to this question. All you have to do beta is simply arrive at profitability. All you have to do beta is simply arrive at profitability, guys, under different options here. Yes. Yes, beta. So we're talking about question number 2, guys. First, we will compute profitability of division X beta at different price levels. First bit beta, divisional profitability level at each level of output, correct? So first beta is profitability of division X. Profitability of division X at different levels of output. Do not forget the transfer price that I specified in the question, guys, is 90 rupees. And the cost structure as such, beta, the cost structure of this division is, cost structure, guys, is 5,62,500. 5,62,500, guys, for up to 5,000 units. For up to 5,000 units. Additional 337,500 for every additional 5,000 units. For every 5,000 units. Additional 3,37,500 beta for every 5,000 units. Let us see beta here. The output, guys, can be 5,000, 10,000. All of you beta can do this. It's a simple question. 15,000. I just wrote the given details beta 20,000, 25,000 and 30,000. साथ में कर सकते हो, but you can do it with me. It's a simple one. We're just computing profitability of these divisions but at different price levels. At different price levels. तो यहाँ पे बेटा these are your output levels as such, guys. My transfer price, ये लिख रहे हो ना बेटा सब लोग? I'll write बेटा revenue at 90 per unit. 90 per unit would be 4,50,000. This beta would be 9 lakhs. Here beta, because his selling price per unit beta does not change with the change in output. Because his selling price per unit does not, his transfer price is remaining at 90 rupees, but it does not change with the change in output. There's no economies of scale, nothing. Doesn't make sense, guys. But that is why beta, as you keep increasing the output as such, guys, as you keep increasing the output beta, as his profitability will keep increasing. Division X profit beta will keep increasing. Here, guys, when I talk about cost beta, remember I just gave you these details. It is 562,500. Keep increasing that beta by 3,37,500. 9 lakhs. So 12 lakhs, 37,500. 15 lakhs, 75,000. 19 lakhs, 12,500. 22 lakhs, 50,000. This is the cost that we are incurring, guys, at each of these levels. The amount of profit beta would be negative 1,12,500. 0. 1,12,500. 2,25,000. 3,37,500 and 4,50,000. Simple, guys. This calculation we will have to do better for division Y also, but division Y, guys, selling price per unit is not constant. I'm waiting for a minute, guys. 2 minutes actually till you all finish this. Till you all finish this beta. Yes बेटा, I hope you're all done with this. ठीक है, 3 minutes या बेटा 2 minutes बोल के. Now guys, profitability of division Y. Profitability of division Y. Okay sir. Here beta, when we talk about profitability of division Y as such guys, division Y, please do not forget beta, the total cost as such guys will have two components. The total cost as such beta would have two components. Cost incurred that they have beta is 14 lakhs 6,250 for first 5,000 units. For first 5,000 units guys, plus additional beta plus 56.25 per unit in excess of 5,000 units. In excess of 5,000 units plus beta there is transfer price 90 per unit, 90 rupees per unit. Please do not forget beta, you will have to take both of them into consideration as such guys. You cannot ignore them. You cannot ignore both as such beta, you will have to take them into consideration. Understood sir? If I talk about output levels as such guys, if I talk about output levels, it can be 5,000, 10,000, 15,000, 20,000 and 25,000, 30,000. I just wrote these cost details, but as to what is the cost of division Y beta, what will be the total cost incurred, that includes our internal transfer price. यहाँ पे guys calculations will take a little time because your selling price per unit is also not constant guys. 393.75, 298.5, 247.5, 208.5, 180, 150.75. Our total revenue beta, our total revenue guys would be 5,000 into 393.75 is 19,68,750. 10,000 into 298.5 beta is 29,85,000. 15,000 units into 247.5 beta is 37,12,500. 20,000 into 208.5 guys is 41,70,000. 25,000 into 180 beta is 45 lakhs. 30,000 guys into 150.75 beta is 45 lakhs 22,500. These beta would be your revenues as such guys at different levels. These beta would be the amount of revenues beta. Amount of revenues. Understood sir? एक second beta. Yes guys, next beta is their cost beta. I'll divide their cost into two parts as such guys. What is our own cost incurred? I already gave you details of own cost incurred as such beta. I already gave you details of own cost incurred. 14,06,250 beta for the first 5,000 units. Thereafter beta it is 56.25 into 5,000 guys. You will have to keep adding 2 lakhs 16,87,500, 281,250, 19,68,750, 281,250, 22,50,000, 281,250, 25,31,250, 281,250, 28,12,500. So these are the amounts of cost that we have incurred as such guys. Using these transfer price beta, this is also their cost. Whatever is the revenue that they are booking beta, please write that as cost here. Whatever is the revenue that the other divisions booked beta, 4,50,000, 9 lakhs, 13,50,000, 18 lakhs, 22,50,000, 27 lakhs. Based on this beta, you will get the amount of profit guys. That would be revenue minus own cost incurred minus transfer price. Revenue minus own cost incurred beta minus transfer price beta. So here we are making a profit of 1,12,500. The first division guys. 29,85,000 minus 67,87,500 minus 9 lakhs. 397,500. 37,12,500 beta minus 19,68,750 minus 13,50,000 is 3,93,750. 4170 beta minus 22,50,000 minus 1,80,000. Sorry, another 16,20. 4170 minus 22 lakhs 50 minus 18 lakhs 1 lakh 20,000. And here guys, 45 lakhs minus 25 31 250 minus 2250, loss of 2 lakhs 81,250. 45 22 500 minus 28 12 500 minus 27 lakhs 9 lakh 90,000. 9 lakh 90,000. So this beta is the amount of profits. These are all the amounts of profits. Understood? Yes sir, understood. Copy karo beta. We're not done with the entire question yet guys. We are not done with the entire question yet beta. You guys copy this. I hope you're all done with this, guys. सबका हो गया ना ये? चलो guys, it is not the end of it, but I will also have to compute profitability of the entire company, guys. In order to answer, we are done with the first bit, guys. Divisional profitability statements are done, guys. But for the second bit, guys, is asking us to find out profitability of the company as a whole, guys. When division X net profit is maximum, when division Y's net profit is maximum. What I'll do better is I'll compute profitability of the entire company better. Profitability of the company, guys. And then we can write all the three bits better there. We will now talk about profitability of the entire company, guys, and then we can answer all of them. So now, guys, I will have to write what is the profit made by these divisions, guys, at each of these output levels. At each of these output levels, better. Add those profits, and that will give me better profitability of the entire company. They said division X beta is making a loss of 1,12,500, correct? Yes, sir. And here beta 0. Here 1,12,500, 2,25,000, 3,37,500, 4,50,000. This is the amount of profits beta of division X. Division Y beta, first they're making a profit of 1,12,500, then 3,97,500, 3,93,750, guys, 1,20,000, 2,81,250, and 9,90,000. 9,90,000, guys. Okay, okay, sir. If you look at the overall profitability here, better overall profit of the company, just add these two figures, better. Here I'll get zero profit. Here 3,97,500. Here, guys, it is 5,06,250. Here it is 3,45,000. Here, guys, it is 56,250, and here, but it is 5,40,000. 5,40,000. These are the amounts of profits, guys. 337,500 minus 281,250. ठीक है? Yes, sir. Based on this, बेटा, we can arrive. सुन लो, guys, अभी 2 मिनट के लिए, बेटा, you can copy later. He's asking us better to arrive at the profitability of the company where the profit of division X is the highest. The profit of division X beta is the highest at 30,000 units. When profit of division X beta is highest at 30,000 units, the overall entity is incurring a loss of 5,40,000. The entire company beta is incurring a loss of 5,40,000. They are not making any profit. Likewise, beta, the profit of division Y beta is highest at 10,000 units. Highest at 10,000 units. But at that point, beta, the overall company is just making a profit of 3,97,500. If you were to actually take decision from the viewpoint of the entire company, beta, they should be operating at a volume of 15,000 units. So usually क्या होता है बेटा, you first decide as to what is good for the entire organization. We know better than an output of 15,000 units is the best from the viewpoint of the entire organization. Then you bloody decide a transfer price better that will be just and fair to both the divisions. That will be just and fair to both the divisions, guys. Both the divisions would be happy about such a transfer price in exist. ठीक है? ये कॉपी करो बेटा अभी सब लोग. कॉपी दिस गाइस, profitability of the company बेटा, and then we will write those conclusions, guys. We will be writing those conclusions बेटा after this. Write this, guys, all of you. Yes, beta. I hope you're all done with this. Now let us write the conclusion, guys. Here, let us all write the conclusion, beta. What would be the conclusion? Write down. Second bit के beta answers that we are writing. I hope you're all done with those conclusions, guys. Second bit में beta first. The profit of division X, I've already explained beta, write down. The profit of division X is maximum at 30,000 units. Is maximum at 30,000 units. The overall profit, the overall profits of the company at 30,000 units, is negative 5,40,000. The overall profits of the company but at 30,000 units is negative 5,40,000. Likewise, better the profit of division Y, is maximum at 10,000 units. The overall profit of the company, better, the overall profit of the company at 10,000 units, जो भी अपन बात कर रहे हैं बेटा अभी, at 10,000 units is, if you look at the overall profit of the company at 10,000 units, beta, it is only 3,97,500. 3,97,500. Yes or no? Yes, sir. This is the answer, guys. But from the viewpoint of company, guys, matlab, if you ignore this divisional form of organization, if you ignore the fact beta, that the profitability of the divisions are more important, from the viewpoint of company, guys, the output level should be 15,000 units. The output level beta should be 15,000 units. Profit beta at 15,000 units is the maximum, guys. Is the maximum. That is rupees kitna hai beta? 5,06,250. These are the conclusions that we are supposed to write, guys. Undoubtedly, beta, here transfer pricing is resulting in suboptimal decision making. If division Y, imagine beta, division Y beta is the one who's ultimately selling it to customers, so he will dictate the output. So if division Y beta is restricting the output to only 10,000 units, beta, the company as a whole beta will lose. If division Y, please understand, guys, note, वो पूछा नहीं बेटा, सुन लो guys एक बार. If division Y restricts the output, if division Y beta is restricting the output beta to 10,000 units, isn't the company as a whole losing? Yes, beta. It will result in suboptimal decision making. So what are you supposed to do, beta, is first decide what is the optimum output level from the viewpoint of company, beta, and then let them share profits. Always decide what is the optimum level of output, guys. Always decide the optimum level of output from the viewpoint of company. This is ultimately, you cannot go better. Do not forget better goal congruence. The whole concept better is to ensure that the profitability of the divisions as such, guys, is not given a priority, guys. The divisional goals better should be aligned better with the organizational goals. So always decide the optimum level of output better from the viewpoint of company. From the viewpoint of company, guys. समझ में आ रहा है? Yes. And then decide transfer price, and then beta you can always decide what should be an optimum transfer price. पहले देखो बेटा as to what is the best thing from the viewpoint of company. समझ गए सर? खत्म कर दो बेटा. With this we are done with the second question, guys. We will now have a discussion of the other transfer pricing methods. Yes, guys. Yes, beta. Are we all clear about this? I hope you're all writing this, beta. I hope you're all done with this. Here, guys. Yes, बेटा, I hope you're all done with this. बहुत ज़्यादा टाइम दे दिए सर आप हमारे को कॉपी करने के लिए. So guys, we are finally done with this question, but is only to understand that yes, boss, transfer pricing can result in suboptimal decision making. Here, if division Y beta was actually acting on the basis of profits that are reported by division Y, company as a whole will lose. And the first question beta was to tell you as to what is cost-based transfer pricing method, what is market price-based transfer pricing method, and how do you share profits beta in relation to cost. ठीक है? Yes, sir. Now guys, going back to your concept book beta, going back to your concept book, we will now discuss the third transfer pricing method beta, and that is cost based transfer price. Cost based transfer price beta. Go back as such guys to your book as such guys. ये अपना क्या बोलते हैं बेटा, गो बैक टू योर बुक मतलब गाइस कॉन्सेप्ट बुक के साथ बेटा, कॉन्सेप्ट बुक. सो गाइस कॉस्ट बेस्ड ट्रांसफर प्राइस में क्या होता है बेटा, द ट्रांसफर प्राइस एज सच बेटा वुड बी यू नो गाइस बेंचमार्क्ड टू इंटरनल कॉस्ट. ट्रांसफर प्राइस एज सच बेटा वुड बी बेस्ड ऑन इंटरनल कॉस्ट incurred as such guys. Now this cost that we're talking about as such beta, the organization might decide that it is marginal cost, the organization might decide it better to be standard cost, the organization might decide as such better to be full cost, or beta it can be cost plus markup as well, beta. See the advantage beta of cost based transfer pricing method as such guys, advantage kya rahega beta here is that you know beta that you are benchmarking it to your own internal cost targets as such guys, you are benchmarking it beta to your own internal cost targets. Usually beta that these organizations work as cost centers, that is where beta transfers are made at cost. Normally beta their work as cost centers, so you will have to you know guys, they will work as cost centers. यहाँ पे बेटा और एक चीज सबसे बड़ा डिसएडवांटेज, द बिगेस्ट डिसएडवांटेज ऑफ कॉस्ट बेस्ड ट्रांसफर प्राइसिंग बेटा कैन बी दैट दे माइट नॉट बी एनी एक्चुअल एफर्ट बेटा पुट इन टू इम्प्रूवाइज द कॉस्ट. मतलब guys, you might not actually implement cost reduction techniques, you might not actually implement cost control techniques as such beta, because you know that the cost burden is anyways being shared by someone else. It is, the burden is not falling on your heads as such beta, you are passing on the cost to the next division, so the next division has to worry about it, you do not have to worry about it. Try recollecting beta under pricing decisions, I told you beta, when we talk about price sensitivity, there's something called a share cost effect. When someone else is paying for that expenditure as such beta, you are not price sensitive. Likewise beta, when someone else is sharing the cost here as such beta, you might not actually put in effort as such beta to save the cost. You might not actually put in effort as such beta to save the cost. समझ में आ रहा है ना sir? So that is under this beta, as I told you, it can be marginal cost, it can be full cost, it can be standard cost. Marginal cost is basically used beta when there's a lot of idle capacity. Marginal cost as such beta is basically used when there is idle capacity in the plant as such guys. Idle capacity. You do not have to worry, you do not have to remember that now beta, because when I talk about transfer pricing from the viewpoint of decision making, anyways I will cover all of these points. From the viewpoint of the organization guys, from the viewpoint of decision making, I will cover these points. But anyways beta, marginal costing as such guys makes sense when there's a lot of spare capacity in the organization. Only if there is spare capacity as such beta, you might want to transfer goods at marginal cost. इसका सबसे बड़ा disadvantage बेटा is whoever is the transferring division as such guys, whoever is the transferring division beta, it will always incur a loss if profits are big, if performance is based on profits as such guys, if performance is based on profits as such beta, remember, because transfers are made at marginal cost, it will always incur a cost because it is not recovering fixed cost, it is not recovering fixed cost as such beta. Behavioral consequences as such guys, it is basically used as such beta when you are trying to evaluate profits from the viewpoint of the entire organization guys, and there is surplus capacity. Please remember that guys. Non-recovery of fixed costs as such beta would demotivate the supplying decision as such guys. He might not want to expand, he might not want to expand as such guys, he might not want to expand as such beta, he might want to just, you know guys, leave it the operations at the current level. Behavioral consequences, you know better that anyways you're being compensated only for marginal cost, why will you want to increase your fixed cost by expanding your capacities? Now you will straightforward reject all of that. So marginal cost based transfer price beta, advantage is that there's excess capacity, disadvantage is that beta there is no fixed cost or markup, so whoever is a transferring division will always incur a loss. Behavioral consequences beta, it is demotivating the supplying division, they will not incur beta, they will not invest in capacity expansion. This is marginal cost based transfer pricing method. Understood sir? As far as standard cost based transfer pricing is method is concerned beta, transfer price is equal to standard cost. Transfer price as such beta is equal to standard cost. एक second guys, sorry. Yes beta, 1 second guys. Yes beta, so under standard cost as such beta, the amount the transfer price as such beta will be equal to a standard that has been set as such beta, is equal to standard. Advantage क्या है बेटा, performance evaluation can be done guys based on budgeted cost targets. You can always try to evaluate, it is not based on actual cost बेटा. now जैसे पिछले वाला था बेटा actual marginal cost, they might not even try to, you know guys, achieve efficiencies. Whenever बेटा transfer price is based on actual cost as such बेटा, it affects cost performance. ठीक है, they might not guys actually put in effort to improve their cost. But if it is based on standard cost beta, you can evaluate their efficiencies by comparing actual cost with standard, so this can result in cost improvisation. They can actually put in effort beta to improvise the cost. Disadvantage beta is per profit, whenever transfers are made at cost as such beta, performance profits are measured at the overall entity level as such guys. Behavioral consequences, standards are based on past records as such guys. You might not be actually putting in effect but putting in effort to achieve real cost reduction. It might only be cost control, but not real cost reduction. That is standard cost. Full cost mein beta advantage kya hai beta, that okay, you are also recovering your fixed cost, as such guys, so you are not incurring any losses. Disadvantage beta is that you are not making any profits, which will demotivate the supplying division. ठीक है बेटा. yes sir, यहाँ पे देखो बेटा, when you transfer at full cost, beta, when we take from the viewpoint of decision making as such, guys, we will not consider full cost because fixed cost is not relevant for decision making. Fixed cost is not relevant for decision making. तुम्हारे लिए बेटा you are recovering fixed cost also बेटा, but for the receiving division, whoever is receiving units from you बेटा, every cost बेटा for him becomes variable. It should not affect the output decisions, guys. It should not affect your decisions regarding output. Finally, beta, this cost plus markup method as such, guys. Cost plus markup method mein beta, the problem that there was no incentive to the divisions is being solved. The problem beta that there is no incentive beta to the divisions is being solved beta under cost plus markup method. Do not worry, guys. I'll give you notes. क्या याद रखना है बेटा? Marginal cost, disadvantages because there is no recovery of fixed cost, there is no recovery of any, there is no profit at all as such, guys. So there is behavioral consequences में there is no motivation as such, guys, to invest more. पहले लिखो बेटा कॉस्ट बेस्ड ट्रांसफर प्राइसिंग, गाइस. ट्रांसफर प्राइस इज बेस्ड ऑन इंटरनल कॉस्ट रिकॉर्ड्स. ट्रांसफर प्राइस इज बेस्ड ऑन द इंटरनल कॉस्ट रिकॉर्ड्स. इंटरनल कॉस्ट रिकॉर्ड्स useful beta when there is no market. Useful when there is no market for the intermediate product. When there is no market, सब लोग साथ में लिखो बेटा, for the intermediate product. If you do not have a market for the intermediate product beta, transfer price based on internal cost records beta would be useful. Would be useful. Understood, sir? Yes. Cost can be, cost beta can be marginal cost, can be marginal cost, can be standard cost. Cost beta can be marginal cost, standard cost, can be full cost, or it can also be cost plus markup. It can also be cost plus markup. Cost plus markup, guys. If you talk about the overall advantages as such, guys, overall advantages. Overall advantages, beta. Information is easily available. Information is easily available because this is internal. Internal है बेटा ये. This is internal to the organization. So yes, information is available. Correct, sir. And then beta the other part. Based on internal cost targets. Based on internal cost targets. As far as the disadvantages are concerned, beta, disadvantages are concerned. Remember, guys, there'll be no incentive, guys. No incentive to reduce cost. There'll be no incentive beta to reduce cost. To reduce cost, or cost data can be manipulated. Cost data can be manipulated. What if you are manipulating the cost data, guys? So that disadvantages beta can be there as far as cost based transfer price is concerned. Cost based transfer price. So first beta, it should be based on internal cost records. Useful beta when there is no market for the intermediate product. Advantages and disadvantages. नहीं हुआ है तो pause करके copy कर लो बेटा. If you're not done with this beta, please pause and copy this. Understood, sir? Please pause and copy this part, guys. I'm waiting. 1, 2, 3. Yes, sir. Under this beta, marginal cost. Marginal cost beta. Transfer price beta is equal to marginal cost. Transfer price beta is equal to marginal cost, that is incremental cost incurred. First thing beta, remember, used beta when there is excess capacity. Used beta when there is surplus or excess or idle capacity. Idle capacity. Otherwise beta, this does not make sense, guys. Why will the transferring division even agree to it as such, guys? Agree to it. Advantage mein beta, you will write useful when there is surplus capacity. Useful when there is surplus capacity. Okay, sir. That is where you will use this, guys. Disadvantage beta, as there is disadvantage. The selling division always incurs a loss. Selling division beta always incurs a loss. Always incurs a loss. Behavioral consequences beta. Behavioral consequences. क्या रहेगा बेटा behavioral consequences? Basically beta demotivating as such, guys, to selling division. Demotivating the selling division beta. No incentive to make investments. No incentive to make expand capacity. Why will they want to expand capacity? Because they will only incur more losses. They will only incur more losses. This is marginal cost based transfer pricing method. Please write this, guys. Please write this. बेटा behavioral consequences भी लिखना है अपन को. This was whole. ये pause करके copy कर लो. But I just explained. I'm zooming in as such, guys. You can pause and copy. You can pause and copy this, guys. Yes, beta. I hope you're all clear about this. Next, beta, if you use standard cost, as such, guys, transfer price as such, beta, will be equal to standard cost. Transfer price, beta, would be equal to standard cost. Standard set, beta. If you look at the advantage as such, beta, performance, beta, can be benchmarked against targets. Performance, beta, can be evaluated using standards. You can always evaluate the performance as such, beta, using standards. Disadvantage as such, beta, guys, is that usually beta, divisions work as cost centers only. There is no profit accruing to them. There is no profit that accrues to them as such, guys. Behavioral consequences, guys. Remember, guys, there's only cost control is implemented. Only cost control is implemented, beta. Cost reduction is not implemented. Cost reduction is a real reduction, guys. I hope everyone knows this is not implemented. Copy kar lo, beta. This is standard cost, guys. This is standard cost. I'm zooming in as such, guys. You will pause and copy this as well. I want all of this, beta, to be there in your notes. Please copy this, guys. All of you, beta, copy this. Yes, beta. Finally, guys, full cost method. When you say full cost as such, beta, it is both marginal cost and recovery of variable cost. Marginal cost, beta, plus fixed cost as such, guys. सबसे बड़ा प्रॉब्लम यहीं पे आता है बेटा. एडवांटेज as such, beta, is recovery of total cost. As such, beta. Disadvantage, beta, profits will never accrue. No profits to selling division. There are no profits to selling division as such, guys. Behavioral consequences as such, guys. Most important when it comes to analysis part. What will happen, beta, if they do it on full cost basis? As such, guys. So, guys, this might result in suboptimal decision making. Suboptimal decision making, beta. How, sir, will it result in suboptimal decision making? Fixed cost will not increase or decrease. What if the other division rejects? This might result in how will it result in suboptimal decision making, guys? I will give you an example. Please do not worry, beta. Example to be discussed. Please do not worry about it. Example to be discussed as such, guys. Please do not worry about it, beta. ये copy कर लो, beta. Full cost. All of you copy this, beta. Full cost. Marginal cost plus fixed cost, guys. Marginal cost plus fixed cost. Pause करके copy करो, beta, ये सब. अब ये देखो, guys, यहाँ पे एक example. Division A का बेटा variable cost is 35 rupees. Recovery of fixed cost, beta, is say 10 rupees. Total 45. Division B, guys. Beta. cost of input beta is 45. Additional cost that is incurring as such beta is say 15. So total cost 60. But selling price as such beta is only 58. Selling price is only 58 as such, guys. Now guys, division B rejects the order. Division B rejects the order. Look from the viewpoint of the company beta. From the viewpoint of company. From the viewpoint of company, you see guys, this is an important, see guys, what did I tell you beta? Here this is full cost basis. Division A beta is incurring a variable cost of 35. There's a recovery of fixed cost of 10 rupees. Fixed cost is not relevant for decision making. There's no increase or decrease in fixed cost. From the viewpoint of company guys, selling price is 58 rupees. And additional cost as such beta is, division A beta is incurring 35. Division B beta is incurring 15. Matlab 50. It is still realizing 8 rupees beta. It is still realizing 8 rupees. So if the order is rejected as such beta, company as a whole beta will lose this 8 rupees. If the order is rejected, company as a whole beta will lose this 8 rupees. Isn't this resulting in suboptimal decision making? Yes sir. This is the most important behavioral consequence beta of full cost as such guys. Guys, ये भी pause करके copy कर लो बेटा. Class is towards the end as such guys. You can pause and copy this guys. I know you guys are great beta. You can pause and copy this. You can pause and copy this beta. 1, 2, 3. Yes beta, I hope you're all done with this. Now finally beta, cost plus markup. Cost plus markup. Cost plus markup अगर है बेटा, advantage as such guys to the selling division is it will always result in profit. Always profit beta to selling division. Profit to selling division. Yes sir. यहाँ पे बेटा disadvantage as such guys is, disadvantage as such beta is justification as such beta. See basically guys, there can be certain expenses not incurred on internal transfers but they're still recovering it as such guys. Certain expenses are not incurred on internal transfers. Not incurred on internal transfers. On internal transfers but still recovered. But still recovered as such beta. Behavioral consequences में तो एक ही point है बेटा. No cost reduction. No cost reduction. They're not motivated only better to reduce cost because anyways better the cost burden is passed on to the other entity. Anyways the cost burden is passed on to the other entity as such guys. So they are not motivated only as such better to reduce cost. They'll be like, why should we reduce cost? Anyways we are getting recovery of full cost better and plus we are also getting a markup. We're also getting a markup. There's only one transfer pricing method left better and that is negotiated transfer pricing method. I will be discussing that better in the next class. You can pause and copy this guys. You can pause and copy this. I will be discussing negotiated transfer pricing method beta in the next class and we'll also be starting transfer pricing and goal congruence. Very interesting questions guys. All of them beta would be interesting questions. Okay guys. I'll see you guys in the next class or such beta. Bye bye. Take care. See you guys.